At this summit, there's this startup doing AI empowerment for the physical world, basically robots. Humanoid robots, dog robots, even little scooter. Looking robots are popping up everywhere. They're designing them for warehouses, logistics, the battlefield, and even firefighting. Now, I already knew about the robots dancing on the Spring Festival Gala. But here's what I didn't know. A robot tribe is forming. Do you hear me? A robot tribe is taking shape. I'm incredibly proud to be Chinese because over half of the AI industry, even in the US, is Chinese. In major American AI firms, 70% of the staff are Chinese. I have a huge advantage here because most of them are from the mainland. I was stunned to see the prototype of this robot tribe emerging. What exactly is a robot tribe? Out of all these robots, there's a boss, the newest one with the most processing power. It's designated as the leader. For example, since it has the most power, the leader walks through a warehouse once and records all the coordinates. After that, it's not humans anymore. It's the leader, the robot itself, the AI giving orders to the dozens of robots under its command. In other words, I've realized that in the future, every one of us will live within a robot tribe. My life could very likely be lived inside one. You might have dozens of these robots at home. One handles this, one handles that. You've got robots for cooking, driving, and filing your taxes. And out of all of them, there's a butler. The leader, it assigns tasks to all the other robots so you don't have to. That really shook me. With one central brain, once it learns something, you don't have to say another word. Every other robot knows it instantly. And it's not like humans. With humans, the older you are, the more experienced you get. With robots, the newer the model, the more badass it is. In the future, robot tribes will live alongside us. Human tribes and robot tribes, silicon-based life and carbon-based life, coexisting for a very long time. Now, does China have robots? Of course it does. Don't be one of those haters who dismisses everything from China. Sure, China is a bit behind on original innovation, and the US is miles ahead in that area. But when it comes to following through and scaling up, China is definitely number 2. You won't find a number 3 on this planet. So robots supporting robots, robots designing robots, and robots building robots. That's our future, and it's not that far off. The speed of iteration is incredibly fast. AI and robots are actually here, but we haven't reacted yet. This is the real challenge we're facing. The era is here. The era of AI and robots has arrived. But no one is ready except for a few people in Silicon Valley, Louisiana, Shenzhen, or Hangzhou, who have finally caught on. Most people in China and the US just aren't in the zone yet, and that's why this impact is going to hit so hard. I also realized something else. You all know I'm in finance and my predictions are usually spot on, but everyone has noticed that I actually got my prediction for the US stock market macro trend wrong. I said 35,000 points was the limit and it would pull back, but instead it's charging toward 50,000. Why? It should have gone down at 35,000. So why is it at 50,000 after this brainstorm a few days ago? It finally clicked. Let me share what I didn't know. AI robots. In my world, I see the future. People talk about Tesla or whatever using robotaxis. That's AI turning a car into what's called a cybercab. This car just sits at your house and serves you. You buy one, but you only use it for maybe 2 hours a day. When you are not using it, say when you are at work, it stays in the garage, or when you go to bed, it stays in the garage. But now, that car will go out on its own to pick up fares. It'll go out and drive for Didi or Uber by itself. After it finishes, it makes money for you. Then it washes itself, charges itself, and parks back in your garage, waiting for you the next day. This is the change coming to the auto industry. We're moving to a state where, with the rise of AI and robot cars, human society won't need this many vehicles anymore. Every family won't need to buy 2 or 3 cars. You won't see parking lots full of idle cars or cars just sitting around. That's over. Since all cars will be AI and networked together, they'll always be on the road. They won't just sit in a garage for no reason. 100 years from now, there probably won't be any cars in garages. A car will only exist to 1. Wait for its owner, 2. Charge, 3. Self-clean, or 4. Be on the road. You'll never see them sitting in a lot or garage for huge chunks of time again. This means society will repurpose tons of parking lots and garages for other human uses. AI cars are going to change human society in very specific ways, and we just haven't realized it yet. So, if we follow that logic, what happens to the money in the stock market? What if you have all these robots trading stocks? It used to be fund managers. A fund manager watches the market during the day and sleeps at night. In the future, robots will trade for them. A fund manager gets distracted, loses focus, fights with their wife, or goes on vacation, but a robot doesn't. We have these gacha automatic trading softwares now, like the early stuff from DeepSeek or Highflyer, and they're only getting better. Right now, they're monopolized by a few small unicorn companies, but once this goes mainstream, everyone will use AI to trade. Everyone will have a robot running their trading strategy. It used to be that if you traded stocks, you maybe worked at it for 1 or 2 hours a day. In the future, one person can manifest countless robots to trade for them 24 hours a day. No fatigue, No emotions, no jumping off a building because they lost money, and no getting confused. That's just not going to happen. So what does that mean? It means that because of AI iteration and market entry, a massive amount of capital is appearing in the markets. It's the same amount of money, but the efficiency is through the roof. It's just like robotaxis replacing human drivers. If you have $10 trillion in a market, the results are totally different depending on whether humans or AI robots are running it. In reality, why isn't the US market dropping? Because it's not being run by humans anymore. This bull market is being driven by AI robots. Even without more money, the efficiency has increased 10 to 100 times. It's effectively like having 10 or 100 times more money. That's why we see this never-ending bull market. It won't even drop. Why? Because there is more money. It wasn't printed, but the efficiency created the same effect. Now, is the future really this beautiful? Is it never going to drop again? A normal correction used to be 20%, but maybe now it is only 3% or 5% before it's done. Because every AI iteration creates even more efficiency. Is that how it works? Well, a major article just came out, and I highly recommend it. It's called The 2028 Global Intelligence Crisis. It was released on the 22nd of February, just a day before I went to LA. This article is incredible. You have to study it, or you'll make the same mistake I made with Bitcoin. Back then, I thought it didn't matter and wouldn't affect me. Look at me now. I'm out here doing a second startup because I don't have enough money. If I had $100 billion, I wouldn't be doing this. And that wasn't a pipe dream. In 2012, I could have bought a ton of Bitcoin. I had the money in 2011. I was restructuring public companies in 2008. Plenty of people came to my office. Some even came to my house to tell me about blockchain. In the end, I brushed it off. I thought it was stupid. I thought only losers and people who couldn't make real money would design something so pointless just to feel busy. I didn't even look at it. But today, it has changed the world. Back then, it was less than $200. I could have bought it for less than $200 a coin. That was my conclusion when I finally looked at it. Now, it's worth way more than $20,000. It's way more than $200,000. Wait, my daughter is calling. Does she not know I am streaming? I'll see what she wants if she calls back. Anyway, back to business. AI is the next wave, and we can't afford to be arrogant or act like old fogies this time, dismissing new things as loser stuff. We need to look at what the brightest minds in AI are saying. This article, The 2028 Global AI Crisis, is written as a financial history thought experiment from the future. It hits hard because it's not a boring technical report. It's written like a time travel story. It's like someone traveled to 2028 and is looking back. It's not a doomsday novel. Its only goal is to play out a scenario no one is taking seriously yet. This was first brought up by our friend Alip Shah. We brainstormed the answers together, and I wrote the article. As the AI economy gets weirder, we need to prepare for left-tail risks, the absolute worst-case scenarios. This article wasn't written in 2026. It's a memoir of a finance professional written in June 2028, looking back at the causes of the global economic crisis that happened then. So, let's look at this leak from the future. It was written 5 days ago, on the 22nd of February 2026, but the setting is the 30th of June 2028. This morning, US unemployment was announced at 10.2%, which was 0.3% higher than expected. The market dropped 2% immediately, since October 2026, remember that date. The market has been on a wild ride. Since today is February 2026, this article predicts the market peak is about 8 months away. By October 2026, when the market hit its peak, the S&P 500 had already dropped 38% from that point. Traders were numb. 6 months prior, a 2% daily drop would have triggered a circuit breaker. But over 2 years, the impact went from a few small sectors to a global macro crisis. The negative impact of AI only took 2 years to unfold. What happened in those 2 years? Let's do a post-mortem of this crisis. Go back to the peak of the hype today, early 2026. This is the most hyped time in history. By October 2026, every bit of AI news was good news. Everything was optimistic, and even risk seemed controllable. Even Elon Musk thought so. In October 2026, the S&P 500 neared 8,000 points. The Nasdaq broke 30,000. The S&P is around 5,000 or 6,000 today. The massive layoffs caused by AI actually started in early 2026. At first, it looked normal. AI arrived. Efficiency went up, and some people were laid off, fired, and replaced by AI. This led to higher profit margins and earnings that beat expectations, which pushed stock prices even higher. That's the AI dividend we're seeing now. Big companies saw record profits. They got a taste for it, and dumped all those profits back into AI processing power to iterate even faster. The macro numbers looked great. Nominal GDP in 2026 hit a record high. Human productivity seemed to be soaring thanks to AI. Everything looked bright. It was a level of prosperity not seen since the 1950s after WE. The engine of this optimism was the fact that for the first time, we had AI robots that didn't need to sleep, take leave, or need health insurance. The people in control of the tech saw their wealth explode as labor costs vanished. Meanwhile, real wage growth collapsed. Even as the government bragged about record productivity, white-collar jobs were being steadily replaced by robots. When those white-collar workers were forced back into the job market, they started taking blue-collar jobs. This caused a break in high-end consumption. By October 2026, economists had a new term for it: ghost GDP. Ghost GDP, it's a perfect name. It gets recorded in the GDP, but it doesn't actually produce anything in the physical economy. I exceeded expectations in every way. The market became a reflection of AI and kept growing. But the one problem was the real economy. You might not understand this. Why would the real economy suffer if AI is so good for the bottom line? Let me give you an example. I'm a big YouTuber now. Everyone knows that. I noticed this while working on YouTube. If you use AI to generate your videos, AI clips, AI scripts, YouTube won't pay you. Did you know that? There are people making beautiful AI videos. But when it comes to monetization, YouTube has started cutting them off because it's AI. YouTube and Google are the big brothers of AI. Google has a massive AI pool. They realize that if they let AI-generated videos just soak up all the ad revenue, eventually it'll just be AI making videos for other AI to watch. Do you get it? The person making the video isn't old Wang. It's a fake AI version. And the 4,000 people in this chat, they'd be AI too. It would be a total waste of time, just a bunch of bots talking to bots. So Google is already starting to scrub ghost economics from their platform. Now you see the problem. Everything looks good on paper, but the real economy is different. This is ghost economics. You should have seen this coming. If a GPU cluster in North Dakota can produce the same GDP as 10,000 white-collar workers in Manhattan or LA, and I mean white-collar like it, or finance guys, then tell me, is this AI economy a blessing or a plague? It's a plague. It's GDP generated by a bunch of GPUs in a warehouse in North Dakota. That's not a cure, it's a virus. The velocity of money is dead, and the human-centered consumer economy is withering. Human consumption used to make up 70% of the US GDP. In China, it's lower, maybe 50%. But now, it's being replaced by ghosts. We could have realized this sooner if we just asked one simple question: how much money does a robot spend on discretionary consumption? The answer is zero, or maybe just the cost of the electricity to charge it. They don't buy anything. As AI gets better and replaces more humans, companies need fewer employees. White-collar layoffs go up, and the people who are left are too scared to spend because they have no income. Profits look great on the balance sheet because costs are down, which pushes CEOs to buy even more AI. This pushes tech companies to build even more processing power. It's a death spiral with no brakes. Human intelligence is being replaced by AI in a downward spiral. White-collar earning power and consumption are being systematically stripped away. Their income used to be the foundation for the $13 trillion US mortgage market, which is the foundation of the whole financial system. Now, that foundation is crumbling. The unstoppable high-quality loans and financial games that were built on the backs of stable, white-collar families with 30-year mortgages, are those still quality assets for 17 years? There were almost no defaults in this sector. This allowed people to build endless private equity structures on top of them, even supporting AI trading itself. But then, in 2027, the first wave of AI-driven real estate defaults hit. The white-collar workers lost their jobs. If it had just been software engineers, maybe it could have been contained. But there are no breaks. It spread from coders to every other sector. By the end of 2027, AI threatened every business model built on intermediation. What is intermediation? Massive companies that make money just by being the middleman vanished within 6 months, just like Nokia. Why? Because those companies survive on human friction fees. Human friction means you, as a human, are lazy. You don't want to research your own car insurance or health insurance. You don't want to calculate your own taxes with the IRS. You don't want to do the legwork when buying a house or a car. You're lazy. And the companies don't want you to know the real costs anyway because you aren't an expert. We all just accepted the middleman system. The agent gets their cut for having the info. You don't. But that's all changing. By November 2027, the first crash happened. Why? Because people realized AI robots could solve these problems 24/7, and it was incredibly simple. In late 2025, intelligent agent coding tools took a massive leap forward. An average developer, using tools like Claude Code or Codex, could rebuild a mid-sized SaaS company's product in just a few weeks. By mid-sized, I mean a company with 100 to 1,000 coders. A single smart kid, even a middle schooler, could recreate everything those companies spent years and millions building. SaaS stands for Software as a Service, cloud-based, Data-driven tools like remote office work, sales, or market maintenance. It used to be that you needed a professional company for that, but now a kid can do it. A kid can basically outsource your whole service department. A middle schooler can do 90% of what a professional SaaS company does. So, if you're the CIO of a company like Xiaomi or Amazon, you start looking at your contracts. If I'm paying a SaaS company $500,000 a year for this service, but a middle schooler can do 90% of it, why am I paying $500,000? I can just hire someone for $50,000 to do it ourselves. Of course, they'll do it themselves and save the $450,000. It makes the balance sheet look better. Most companies set their budgets for 2026 in late 2025. Back then, AI agents were just a buzzword. But by the summer of 2026, when departments started planning their next budgets, they finally realized how powerful the tech had become. They decided to stop outsourcing and do it in-house. I know people who have seen teams replace $100,000 SaaS contracts in just a few weeks. It really happened in the summer of 2026. I talked to a procurement manager at a Fortune 500 company about a budget meeting. Usually, the software vendor would come in and ask for a 5% price hike, telling them, "Don't complain, you can't live without us. Once you are in our ecosystem, you're hooked." But this time, the manager just said, "We're already talking to OpenAI. Their engineers used AI tools to show us they can replace your entire system." That SaaS company was terrified because it wasn't a bluff. In the end, they settled, not by switching, but by taking a 30% price cut just to stay. The manager said they were lucky to even get the 30% cut. He couldn't guarantee they'd still be using them the next year because OpenAI is only getting stronger. This is the long tail of SaaS. A few of these specialized SaaS outsourcing companies saw their stocks tank last week because of this article. The secret is out. Look at companies like Monday.com, Zapier, or Asana. They are in a very bad spot because this is actually happening to them. Investors started dumping shares immediately. These companies make up about a third of typical enterprise software spending, and they're the easiest targets to replace. Everyone thought their business was safe, but it is over.